Bitcoin chaos, but the structure hasn't broken. At least not yet it hasn't. Hey guys, it's Keith Allen. We're navigating this mess. Yes, we are. And, well, things might not be as bad as they might seem because, man, it has been a nasty week and weekend thus far. And quite frankly, I don't see the chaos ending anytime soon. Not with the Manipulator-in-Chief in the office, but, you know, we'll touch on that. But we've got much more to get into. And before we even get into it, well, first, let me just welcome you to BitBreak. My name's Keith Allen. I am a full-time trader. I'm a work-from-home dad, and I'm co-founder of Material Indicators. Glad to have you with me. If you're new to the stream, welcome, welcome, welcome. If you are an OG member, I greatly appreciate you. I appreciate each and every one of you. If you do me a favor before we start, smash those buttons. Help me grow this. I'm working really hard to grow this channel. And quite frankly, the algos have not been that kind to me. So if you can help me out, I would greatly appreciate you smashing some buttons. Hit the like, hit the subscribe so you never miss a future stream. And I'm going to give you a couple seconds to go ahead and share this thing with somebody, a buddy that you trade with or one of your trading groups, because quite frankly, I'm going to drop some alpha on you today and I don't want you to miss it. So let's go ahead and tee this thing up. Before we get too deep in the charts, though, I just want to address kind of the situation because if you're new to trading, especially crypto trading, you've probably getting beat up a little bit. And if you're an old school member, if you're an OG, you've seen this kind of stuff before. But we're at a whole new level. We're playing in a whole new league with El Taco in the office at this stage. So if you've been struggling, trying to, figure out this market over the past couple of days, you're not alone. What we saw over the weekend on Saturday and again on Monday, not normal at all. Complete and utter chaos and self-inflicted, I would say, by our Manipulator-in-Chief. I mean, and shamelessly, I might add. I pointed something out on Saturday, and I'll show. I'll go ahead and show it to you. I saw something on Saturday. I was like, man, this is not cool. He does things under the cover of weekends and after hours trading, et cetera, before TradFi markets are open, and markets respond to what the man has to say, and that's not always a great thing. Let me find, what am I looking for here? I marked this out. Let's see where we go. Let's go to this guy right here. All right. So, yeah, here's we got some nice MTF signals out of this, by the way. On Saturday, literally like a minute or two before he made this announcement, his big threat to Iran, the market dumped. And it was like, I don't know, close to 5% dump in 5 minutes. And a couple minutes before it, the sell-off began. So that made me think, wonder if somebody's getting, some insider information on this. Who might that, who could that be? Like, I don't know, maybe his sons, for example. I'm sure they're probably not the only ones, but I mean, that is the first thing that comes to mind. And then, of course, we had another signal here, unrelated, here around 67.3, 67.4. And then Monday morning, 7:23 a.m., he tacos on his Saturday threat that, he's pleased to report that the U.S. has, getting closer to a deal with Iran, and they're going to pause. They're going to pause their hostilities. Well, it was a matter of minutes. Well, first of all, it was only a few minutes beforehand that the sell-off began. That these are 1 minute candles. So this was only like, 5 minutes ahead of time. Somebody starts selling. And then there was, there's been reports of just big time orders on oil and S&P, et cetera, around this time as well. And that was suspicious. So the entire internet is just inflamed over this manipulation. It seems blatant. And then last night, One of his sons, and I didn't grab the post already, I'm sorry, but you can go find it. One of his sons, I don't know, Eric Don Jr., one of the knuckleheads, gloats, posts that the Trump family has made over $1 billion so far. Well, isn't that convenient, right? I mean, just absolutely crazy. So here we are, right? And things settling down a little bit since the chaos and getting back into the groove. But you never know when the next freaking, tweet or post or whatever you call it now is going to happen that is going to reverse his prior action. The only predictable thing here, well, maybe there's a couple. One is that he's gonna flip flop. He's going to continue to see chaos, and anytime the market is getting to desperately low levels and threatening to crash, he's going to say whatever he thinks he needs to say to try and recover. And this is something I wrote about. We actually did a stream on this, I don't know, a good 3 or 4 weeks ago, about the fact that TradFi seemed to be following the same pattern as Bitcoin. And that theme was, is Bitcoin front running TradFi? And I didn't want it to sound like, despite the title, I didn't, when we got through the analysis, I didn't come to the conclusion that Bitcoin was a correlated front runner per se. However, it seems that TradFi is following the pattern that Bitcoin had here earlier in the year, as all of the key moving averages, death crossed, and then lost the 200-day moving average, which you can see. S&P nosed back above it yesterday on that news, and then here we are back in the red because reality is setting in. The Dow Jones hovering at the moment, literally flat, 0.01% on the day, but also below the 200-day moving average. And as you can see down here at the bottom, the NASDAQ composite also well below the 200-day moving average. So there's that, right? He's going to try and rescue this because his legacy, he attaches everything to the market. So there's that. So how do we deal? How do we deal? Great question. Glad I asked it. The deal is, despite all of the chaos, despite the social media posts and the tacoing, believe it or not, even with this crazy volatility to the downside and then volatility back to the upside, and what was weird here, what didn't make sense was right after this came out, I mean, within 30 minutes or so, maybe even less, Iran disputed the fact that, this statement. They said they haven't been in negotiations with El Taco. And that's my name, by the way. They don't call him El Taco. That's my name. That's the nickname I've given him. So I thought that price would then go down, and it did briefly, right? And then the recovery. And the recovery came sometime after Secretary of State Marco Rubio posted this same piece of content, copy pasted, or not copy pasted, but retweeted or reshared what Trump had said. And so that maybe gave it a degree of validity that maybe some people weren't. I know I certainly wasn't giving it from the beginning. So you don't know who to trust, do you? And what freaking dark times are these, where you really don't know if you should trust the president of the United States or Iran. I mean, we now have it's just insane. It's insanity to even consider that, right? So we are where we are. But the good news is, and there is good news. The good news is, despite all of this volatility, despite the rhetoric, despite the headlines, despite the things that we can't, that just keep us scratching our head and going, what the actual fuck? Despite all of that, the structure is actually still intact. And by the structure, I'm referring to this bear flag It's really a structure within the structure, if you will. Um, let me let's simplify here, um, and we can even take these out of the mix here at the moment, right? We get the point on the social media posts. So we have the structure that I'm referring to here is this bear flag, which is still very much in play. Okay, we've run the range a couple of times here, and this could continue. I quite frankly expect it to continue here, potentially here through the end of the, certainly through the week, if not through the end of the month. And I'll show you why here in a second. Well, why don't I just show you now? We're on a 4-hour chart here. Let's go to the daily, and we can see that as you can, here's support down here on the bottom side, local resistance, and we had, what stopped us up here? We stopped around the 71.3 range, 71.3, 71.5-ish. What stopped us? Well, I'm glad you asked that question too. Timescapes, right? This is actually serving as a pretty consistent resistance level. You can see it was tested here, 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 here. 1, 2, 3, 4, 5, 6, 7. Sorry, 6, 7. My kid's gonna hate that. 8, 9, 10. Excuse me. I lost count. 1, 2, 3, 4, 5, 6, 7. These all resolved lower, right? 8, 9, 10, 11, 12, 13, 14, 15, 15, 16, 17, 18, 20 plus times. Okay. So this is, yes, there's times we get these fake outs, right? But look where the fake outs are ending. They're ending right at the top of the structure. Those wick through. It's not the wicks that count for me. It's the full candle bodies. It's where we close. It's not how you start. It's how you finish. I've said that many, many times. So keep that in mind. You don't react to a wick shooting through a technical level. That's kind of the norm in crypto these days. What you react to, well, you actually want to plan in advance, so you're not reacting, and you want to wait for those closes, especially in this environment, right? So when things are as nasty as they are, capital preservation is the key, and there's a couple ways to do that. Okay, and let's just get to the heart of this, right? And I do want to make sure that you're quite clear on this. Okay, so let's just hide the screen for a second. Okay, so in an environment like this, bear markets typically, you would say capital preservation is the key, and in a situation like this, even more so, right? That's priority number one. Don't lose your ass. This is, at the end of the day, at the end of this bear market, going to present some generational opportunities, and you don't want to be out of powder by the time we get there. So don't overtrade. This isn't the environment you want to be oversizing, overtrading, or reacting to every single headline and every single tweet, because you're going to get whipsawed, chopped to bits, and you're going to watch your account just erode. So times like this, it's good to step back and take a beat for a second, let the chaos settle, and focus on what actually matters, what actually maintains the structure, what actually moves the market, and in a meaningful way. And that's structure, liquidity, and order flow. And so those are the things we're going to focus on here today. And I'm showing you now the structure, okay? And the structure is telling us that Bitcoin is range bound within this bear flag. And this bear flag has not confirmed yet, right? It only confirms if price eventually breaks down through the lower support level, right? At the moment, the upper end of this range would be the range high. But we're locally getting toppy here around this timescape level. Now, this is a structure within a structure, because our macro structure actually takes us to a different level here. Our macro structure looks like this. And let me zoom out a little bit. Okay, so, and let me zoom out even more, and you can get a sense of where this comes from. Okay, so this is longer term, back to 2019, this lower support level. And of course, our downtrend is coming from our all-time high back in October. And so we have this structure within the structure. And if things break down, then we validate this bear flag and we watch price go lower. And if price breaks out from this bear flag, or from the structure, I should say, it invalidates the bear flag, and then these upper levels come into range here. And so let's look at some potential targets. And for that, I want to turn my moving averages back on. And we can see here on the, we're on the daily time frame. We can also look at the weekly time frame and notice that we have some confluences here that are very interesting to me. First thing that comes to mind is, depending on when this happens, we have another timescape level around 78K, just above 78K, that if this took another few weeks to resolve, then we could be right up here. You have confluence with this range. This line would obviously extend up into that, like so, right? So this is all possible. We also have confluence between the 21 week moving average and this downtrend line. We have confluence with this 50-week moving average and these yearly open timescape levels. One here at the first one is at this is actually from this year. This is last year. So we actually on the daily time frame can see that we have two timescape levels from each period, right? From each quarter. One happens on the first day of the quarter. The second one happens on the first Monday, first weekly open of the quarter. And so in terms of targets up there, you have the yearly open was at 87.5, and then you have this second timescape level up here, which on the daily time frame has close confluence with the 200 day moving average. So all of these areas, if we invalidate this bear flag, this could all potentially come into focus, right? And then you're talking about, if you break these levels, you're talking about a potential full bull market recovery, and you would be looking to see price. And I would caution you that this structure might also provide a fake out. It's really reclaiming this yearly open around 87.5. That's super important to me. And ultimately, you'd want to see the 50-week moving average reclaimed to be back up, and off to the races, as they say, and say the bull is back. We're a long way from there, and there's a lot in between here and there for that to happen. And obviously, the instability in the world isn't helping. Gosh, I forgot to mention that live chat is open, but I see we got a couple of folks here. You can't see the charts. Sorry about that, guys. Let's see. I got to go back and reshare that chart. Okay. My bad. Let's try removing this. Oh, it is sharing, but it stopped for some reason. Let's go to this. Okay, let's try and share again. What happened to my module? Bear with me, guys. Sorry about that. Share screen. Back to the window. Window to the wall. Okay. Sorry, guys. My apology. So I got to backtrack that a little bit for you. Okay. Rewind and let's go back to our daily time frame. And the yellow structure here is the bear flag I've been referring to, right? This is the structure within the structure. Got a lot going on here. Let me clean it up for you. The structure within the structure. Here's the bear flag, and the white lines are the macro structure. As you can see, we are talking about a lot of history here on this macro structure. The trend line dates back to 2019 on the lower side, and we've come close to it here, right? This is pretty interesting. I mean, this is compelling in terms of bullishness, in terms of getting near the macro support level. We didn't quite get there, and maybe we won't, but maybe we will, right? So we have the structure within the structure, and this structure within the structure is helping us gauge what's likely to come next. As I mentioned here, we have timescape levels from the second quarter of 2024 acting as the current resistance level, local resistance, if you will. It's been tested dozens of times, over 20 times, as you can see. Boom, 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 boom. Test, 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 test. And it's not the wicks, guys. It's the candle bodies, right? You want closes. Wait, don't react to just wicks shooting through technical levels, because those will often lead you to fake outs. So you really want to wait for those closes. And so in terms of invalidating this structure or validating this structure, if we validate to invalidate this bear flag, we would need to see a breakout above the structure, which currently on the current time frame daily is sitting at what, 76,690-ish. Okay. So 76,600, we'll call it. And if that happens, we have a lot of confluence in various time frames. On the daily time frame, you can see the 100-day moving average is very close to this timescape level. This is also a April 7th, 2025 timescape at 78.3. And if we look on the weekly time frame, we can see even more confluences with the structure up here. If this takes a couple of weeks to play out, then we could conceivably have confluence here. We currently have confluence between the 21-week moving average and the downtrend. And so all of that is in play. We also, of course, have this death cross, right? And this is historically either marked bottoms or led us to the next leg down. And we are at least down from the prior candle of where it happened, but we haven't had that full breakdown yet as we've been anticipating. Now, should we get that breakdown and we do validate this bear flag, which would mean breaking through this support level down here around the what's that, 67, around 67.7, then what are your targets? Well, in terms of technical support levels, you would look initially to timescape levels, right? We've got a cluster of timescapes here around 60, just below 63K. And below that, a lot of sentiment for this 200-week simple moving average, which currently floats around 59K. And then there's another timescape right below that, backstopping that in support at the 58, 59K level. But there's one other factor that you really need to be paying attention to. A bear flag will often resolve with a measured move. We take that measured move from the top of the flagpole down to the bottom. So if we take our price percent, I'm on log scale, so we're going to go percentage based, and we're going to take this down. That's going to go 33% and change. So what's a 33% move look like to the downside? If And it would be from this structure, not from the macro structure down here, but from the current structure. So if that were to happen today, that gets us down to the mid 40s level. And there's certainly some history behind that level, which could certainly validate that, right? So we've had some consolidation in that range before. I'm going to go to another chart and let's go to this guy right here and just show you. Let me take some of these other things out to clean it up and make it easy for you to see. But let me show you some other consolidation in that range that lends some support to the idea of moving to the mid 40s range. And here we are right here, right? We consolidated there. So, there's some other targets that I like between here and there, like where we had this double bottom at 54. However, the measured move, I can't deny that. So this remains a target for me. It could, doesn't mean we have to go there, but it remains a valid target. And whether, in terms of timing, historically, these bear markets take about a year from their breakdown, right? A year from the top. So that would put us roughly around October, November, where we could be expecting to see the end of the bear. And so if we were to hit these levels, let's say we moved it down to the structure here, and we got there this month or next month. Because of the timing, I would anticipate that there would be more downside. Now, if we just chop through this range, and we're going to be forced out of this structure by mid-June, right? One way or another, we're forced out of the macro structure, either a breakout or a breakdown by mid-June. And if that happens, that's kind of buying us some time in this range. And it also may be buying us some potential drawdown. Now, if we get here quickly, if we got here in the near term, then I'd say, hey, we're going down. If it took us until Q3 to get down here, then I would say, hey, maybe we're going to hang. Maybe this is going to hold. And so that's why I have kind of a timestamp, kind of a time-related element in how low we go. So, for example, if we got to 54, same thing. If we squeeze down to 54 and we are in Q2, then I'm going to say there's a good chance that we go lower. And if it takes us until Q3 to get here, then I like that as a potential bottom. So those are my downside targets on this. Let's go back to the prior chart here on trend precognition, and this is my trend precognition chart. I'm going to show you why I think that we're range bound for the time being. And let's eliminate this, and let's clean up the timescapes and just switch on trend precognition now. And trend precognition is indicating that we are not likely to break out of this structure this week. This is a weekly signal, so it's valid for this time frame. So this indicates that this isn't likely going to be the week that we break down. But if we zoom out to a higher time frame, it also says this isn't likely going to be the month that we break down, right? So it's not likely to be the week. And these signals could be invalidated. And God knows, when you got the manipulator-in-chief in charge, that's possible. But at the moment, it is telling us, or indicating, I should say, that there is a low probability that Bitcoin is going to break out above this bear flag structure here this week. And it is also indicating that there is a low probability that we're going to break down below the macro structure, below 60K this month. So that has us range bound for the time being. And, we can watch this on the dailies, certainly, and get some insights in a lower time frame. But man, when things are as nasty as they are, I encourage you to zoom out and look at those higher time frames, because they can be a little bit easier to trade. So, and it gives us some perspective here, right? So we're kind of at the moment working our way between support here down at the lower end of the trend, meaning the bear flag, and that lower range is around those mid 67K levels. And the upper end locally, as I mentioned, is at that Q2 timescape level right here around 71.3. So that's the short-term deal here in terms of structure. So the fact that the structure is still intact despite all the chaos is really important. It actually speaks to the strength of Bitcoin right now, the fundamental strength of Bitcoin right now. Of course, it got some help, got a nice 4.5% tailwind from El Taco here this week, but this is all subjective, right? This is all noise. It's all noise, 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 noise. So if we just tune out that noise, we tune out those headlines, and we just focus on the structure, we can get an idea of where price is going to go. And right now, it's telling us we're range bound for the time being, likely through the end of the month. Now, what else can we work with? What I tell you, those three important things were structure, liquidity, and order flow. So order flow and liquidity are really two important elements of this. And the liquidity specifically can show us why Bitcoin has remained in this range. And for that, we're going to go over to fire charts. And you can see that we have, actually starting to get some liquidity in the order book here. Let's go into a lower time frame. And you can see that we have had support down to 60K. And we have support up into the 80K. I mean resistance up into the 80K range where you have ask liquidity laddered up here. So we're kind of hollowed out in this range right now between the 73s and the 67s at the moment. This is kind of that 67. That's the bottom of the bear flag structure. So liquidity is holding us up. And you can see that some of these ladders, I think I could see it better here. You can see that some of these bid ladders have actually floated up from lower levels. It looks like we have a ladder here that came up from, looks like from that 54K level and worked its way up into the 65 to 67 range. So that helps keep price elevated. This is likely institutional demand, and we've seen a lot of institutional activity in the market here these past few weeks. There's a lot of accumulation, and the reason why, and we're going to look at ETFs too to see what they've been doing here. Yesterday, obviously, was opportunistic for a lot of people, but you can see we had the Friday dump, we had Friday, Thursday, Wednesday, 3 days of dumps, followed by another, positive day yesterday. The fact that yesterday resolved positive was kind of surprising to me, but there have been a series of inflows here back to the middle of the month that have shown some institutional interest here. And the reason that we have that institutional interest, in my opinion, is because we are trading in a level that has a lot of historic importance, and that is the 2021 top, right? 69K was the 2021 top. We consolidated there for a very long time, right? After topping out in 2021, we revisited this level for the first time 2 years ago this month, right? It was like March 4th, 2024, we came back into this range and we chopped there for 8 months until the election day Trump pump took us out of there. So we've built a lot of structural integrity in this level here, which is why I think that anything below this level has been a buy for those institutional guys, right? They like it. And if you're a long-term position holder and you're looking to get dollar cost average, that's a valid level to do so. But it may or may not end up being the bottom. So this is just one of the ways that institutional investors and fund managers like to accumulate the dollar cost average. I'm a big fan of dollar cost averaging. I do it as well with every position. And so it's because it's very difficult to pick those absolute tops and bottoms. So there's that. Now, if this breaks down, it will be interesting to see if these guys bail out and look for that new entry down here at any of these other levels, like I've marked here. So, and yes, we can talk about the potential to go even lower, but I think we just have to go range by range and not speculate. The targets that I've shown you, including that measured move, are measured. I mean, are data driven. So it's not really speculating. Time frame is maybe more speculative than anything. So we're just going to watch and see if Bitcoin can hold these structures, and that will tell us if we're going to continue to be range bound or if we're going to the next. We're going to go to the next range below, or we're going to go to the next range above. Simple as that. So liquidity has been a big part of the story. And the other part of the story here, the other element that is really, really telling, that gives us some clarity in the chaos, and this may actually be, if I can only look at one thing, if I can only look at one chart for the rest of my life, it would be wire charts, because I can see the liquidity here and I can see the order flow down here. And the bin CVD is very, very telling. If we take it down to lower time frames, we can see. I'll be honest with you. I took a couple of scalps this morning, and within the period of 1 hour, I took a short and then I took a long, and they both paid off. And they paid off because I was watching the order flow very, very closely, and I was watching price very, very, and watching liquidity very, very closely. And when, for example, when price was coming down, and the CVD was pinned down at zero, I was riding that short when I saw liquidity come into place, and the CVD started to turn up a little bit. And it's hard to, like in real time when it's happening, it's much easier to see. Let me just zoom into this area and see if I can highlight it and make it a little bit easier to see. So here's what I was referring to, right? Price was just CVD, and specifically the purple whale CVD was buried. Brown mega whales, not so much, right? They're not very active if there's not a lot of liquidity. And so those purple whales were buried, and I just continued to short this. Once I saw liquidity come into place and the CVD start to tick up, I closed that short. And when you see this happening is when you can open a long. Now, in this environment, you do not want to be greedy. I encourage you to take profits quickly and frequently and conservatively so that you can stack some powder and be well positioned when we do get that opportunity. And this, of course, helps offset the drawdown you may be having in your account because of the price erosion that we're seeing. Now, if you get an entry that is at the top or the bottom of the range, long or short, respectively, or I should say short or long, respectively, then those are positions that you can hold longer, right? So if you, right? So the other day, shorted from down low, long from down low. And then when we ran into resistance up here at this 2,200 at this timescape level was a good time to close that position. And likewise, opening at this timescape level when we started to see things break down was a good place to open that position. So if you can get range lows, that's a good area to long, and range highs are a good area to short. And I would say, in addition to that, um, because of the increased risk that we're in this risk-on environment, I suggest reducing position sizes, especially if you're not at these, extreme ends of the range when you're taking your position, right? Like we weren't there today. So I didn't go with a huge order, but took a decent little scalp, again, in both directions. First the short, then the long, and and then I walked away, called it a day because it started getting hard to read. And I did not want to lose what I just earned. Hence, don't overtrade, right? Don't chase it. Middle of the range is very, very rough place to trade. It's why I didn't trade over the weekend. I mean, it was just impossible chop in the middle of the range. So that's kind of what I'm looking at in a very large nutshell. I'm looking at all of these different things collectively to help give me context on what I expect to happen, and using the guidance of both the different time frames, or all three time frames, I should say, in terms of weekly signals from trend precognition, giving me some confidence that I don't think we break out this week, and giving me some confidence that price will at least hold above 60K through the end of the month. Again, those could be invalidated, but at the moment, these signals give me some conviction. And something more to look forward to is at the end of the month, we will potentially get a new signal on both the monthly and the 3-month chart. So we'll be looking for that. And we will get 2 new timescape levels. There's a really interesting dynamic to talk about with these new timescape levels, and I think I will save that for another video because I could do a whole show on that. So as we get closer to the quarterly open, I'll give you some insight on how we can play those timescape levels. And the cool thing is they print the instant the candle opens, and they do not repaint. So we will have that. We will have those levels in, and they will be there across all time frames at the quarterly open. So we've got that to look forward to as well. That can give us some additional insight and clarity through all of this freaking chaos. Hope that helps you out. If it does, do me a favor, drop a comment. I really love the feedback you guys have been sharing with me. It really makes me feel good. I do this for free. So getting that feedback gives me some validation, and your engagement in these videos, especially the subscriptions and the shares, really, really make a difference. So if you haven't done so yet, don't forget, drop a like, drop a comment, and share this thing with a buddy of yours in the crypto sphere. All right, let's do it. And we will be back with more this week as things develop. In the meantime, if you haven't joined us in the Telegram community, you'll find links to it in the description down below. And we have also, of course, got links to all the products in there if you're interested in that as well. Hope this helps you trade smarter. Stay safe, my friends.